Hello and welcome to the trade setup. In this video we are looking at Tesla. It is time for another update, and on this chart we see some interesting developments occurring that could be even suggesting an opportunity for some of us, and that is because we are deep within the area of support and we have fulfilled an interesting movement, an interesting structure within the correction in such a pattern. Now, for context on this chart, we are looking to build here a wave 5, the upside within this idea of an ending diagonal. Within this structure, we already have the wave 1 in place, we have the wave 2 in place, and now we would be looking for a wave 3 to form to complete the pattern, the structure. And within this wave 3, we would be looking to fulfill an A, B, C pattern, where in the wave C, ideally, we would be building an impulse. Now, with such an expectation, we would have a wave 1 in place, a wave 2 down here, and this would be our wave 3 to the upside. And within this wave 3, we would still be looking for one, ideally two more highs before assuming a top would be in place. And in the previous video, we had already invalidated the idea of an extension within this wave 5 to the upside, and we were left basically with this area of support down to the $386, yeah? And since the previous video, we even formed a reset pushing perfectly into this last level of support before creating yet another reaction to the upside. Now, for context, we have also been tracking the idea of a potential ending diagonal to form within this overall wave C, but I do want to highlight that this isn't necessarily the most reliable structure. This isn't going to be a high probability pattern in my opinion, and this is where it depends on the trader, it depends on the investor, if this white area of support is sufficient to propose an interesting trade to you. Because currently we are still consolidating at very deep levels, and it's not that it's impossible to still push into higher prices within this wave C if we fail to hold the 50% retracement. Yeah, it's still possible to extend to higher prices afterwards within a different interpretation, but the reliable structure would have failed below this level. It would have failed to reliably complete our structure, and we do not have a clear expectation of how this overall structure would shift into something else, but we might be witnessing a quite severe failure. But currently this is not the case. We have just pushed into the 50% retracement, into structural support that has formed previous lows within this area, and we have a pattern that can now be considered even complete at this point. So for context within this area, in the previous video we were looking to fulfill this as an A, B, C structure. And before we go into those details, I only wanted to remind you that if you enjoy this content and you enjoy these opportunities and these updates that we provide, all I ask is that you leave a like on the video just to help us help more people and to provide more content. Now, in the previous video, we were looking for an extension in a wave C within this structure to look for a potential extension within a wave 3. We had already achieved forming an internal potential wave 3 to the downside within this structure based on extensions alone, but we were looking for the biggest level of resistance for continued extensions, and since we pushed nearly to the 78.6% retracement, it would be a rather appropriate expectation to look for this to have been a wave C instead. Now, it appears that we didn't manage to build a wave C within this latest push to the downside, yeah? All I can really track within this pattern with some degree of reliability would be here an A, B, C structure. I do not see it really reliable to track this as something like a 1, 2, 3, 4, and 5. This latest development, this latest move to the downside does look a lot better like an A, B, C pattern, which is why I would rather consider that the wave 3 had bottomed here, that this could still work out as the actual wave 4. Even though we broke the area of resistance, it does happen but I believe this is the appropriate expectation, especially towards the end of a structure we do start to see more distortions, and I'm looking for this to have potentially been the wave 5 to the downside, allowing for a complete structure within this wave C perfectly into the last level of support. Now, here's the pleasant part. Even if the count is wrong, even if we get extensions to lower prices and we get a complete failure, looking for positions within this area allows extremely promising risk-reward ratios. It allows us to look with high probabilities that if we get a sustained break below the 50% retracement at the $386, we would know that this structure is most likely going to fail, that we would be looking for a different pattern, a different count, and that we would not see this wave 5 unfold to new all-time highs in the white scenario. So we are basically looking from current prices at the $398 at 3% to the 50% retracement. If you want to leave some room, let's say 4%, 5%, yeah, something like that. If we are looking to push into new all-time highs, and this would be still part of a wave 3, we could easily be looking at 30% profits, possibly even more, yeah, around that area seems reasonable. So it is an extremely promising risk-reward ratio that we witness on this chart. And I can tell you that this structure that has so far formed to the upside isn't the most reliable pattern. We might be able to consider this to be a 5-wave move, but I wouldn't trust a position based on this structure alone, but the context, the larger time frame is providing us an interesting opportunity that can be used. It doesn't need to, yeah. If you feel pressured to take this trade, you probably shouldn't. If you feel comfortable looking for a position within this area, knowing that you might get only a brief break below it, get stopped, and it would still succeed to higher prices, it might be something you could look into, because sure, we might drop just below, we might just grab the liquidity at these previous lows before extending to higher prices. But at the same time, below that is a strong warning that this structure would have failed, that other interpretations would be necessary. So all of this needs to be your own consideration. I am just here to point out that from a large time frame perspective, from this idea of 1, 2, 3, 4, and 5, we have reached the last level of support. We have created a reaction to the upside. And yeah, we have already even failed holding previous levels of support that we provided in the previous video. We had the 78.6% retracement that had been broken. It got a relief rally, and it still extended lower. It was broken. And breaking these levels of support happens. The purpose of these areas is not to predict what will happen. The purpose of them is to provide clear levels where you are no longer tracking this interpretation. They are clear levels to consider that exiting might be a wiser decision. And definitely, at times you would be better off just keeping the position, but in the long run, you need to identify what allows you to stay profitable, because that is the most important aspect. And with such a trading strategy, it's not even important to have 50% win rate. If you have a 1-to-6 risk-reward ratio, or even 1-to-3, let's say, you would be able to have less than 50% win rate and you would still be able to be profitable. That is what is actually important. And for now, I will leave you with this. We can make a summary briefly. So we are looking for, and let me even remove this area, this count, but we are looking for the $386 level to hold. We know a sustained break below that would trigger a different pattern that could take us to much lower prices. Yeah, there is substantial uncertainty below this last level of support, and I'm not saying that we couldn't get a reset of this wave 4 still, even to grab the liquidity that sits here at these previous lows. But how you choose to approach this is ultimately on you, because this is not financial advice. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoy our content and you want to support us directly, don't forget to check out our channel membership. where you even get access to a couple of cool perks including additional content and priority to replies and stock coverages when there is a video slot open. But other than that, let me know what else you would like me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.